Hi there, I'm David from DB Chartered Accountants. Dividends play a major role in a strategy to extract profits from a company tax efficiently. After you've paid a minimum salary, the next option to consider to extract profits should be dividends. For a director shareholder, tax is suffered at two levels. Firstly, their company will pay corporation tax on the profit that it makes. In addition to this corporation tax, as the shareholder extracts the dividends from the company, then they are personally subject to dividend tax. Director shareholders should always take advantage of the nil rate band of dividend tax, as any dividends falling within this band can be taken without any further personal tax being payable, even if the shareholder is subject to higher rate tax. Any dividends that remain within their basic rate tax band are subject to the lower rate of dividend tax, and thus the shareholder should consider taking dividends to maximise those that are subject to this lower rate of tax. Remember, to work out the amount that you can take as a basic rate dividend, you need to add the current personal allowance to the current basic rate band. Then you should deduct all other taxable income that you have. For example, the salary you've taken, or any benefits in kind, or rental income. If any balance remains, you should consider taking dividends to utilise this, provided that there are adequate profits available in your company to cover the dividends. Once you exceed your basic rate band, then the rate of dividend tax increases considerably, and thus taking dividends in excess of this amount should be avoided unless you have no alternative or you're prepared to accept paying the higher rates of tax. Dividends are subject to a number of legal requirements which need to be complied with to be sure that they are valid and cannot be questioned by HMRC or a liquidator if the company gets into financial difficulties. While some accountants may disagree, at DEB we feel that dividends that are decided upon by accountants in retrospect are a very poor alternative to properly declaring, documenting and paying dividends at the correct time. It's only a question of time before HMRC challenge either the validity of such dividends or the precise actual timing of them. Such an important part of your profit extraction strategy should not be left to chance and good fortune. It's far better to do dividends correctly. For a dividend to be valid, it's essential that there are adequate after-tax profits out of which to pay them. These profits can be those earned in the current period or those that are retained from profits earned in previous years. It's advisable that you have some way of demonstrating that profits were indeed available at the time that the dividends were declared. The dividends should be evidenced by a board minute approving them before it is paid out. This should be produced and retained as evidence that this important step has in fact been done. The directors should then arrange for the dividend to be paid to the shareholders and evidence the payment with a dividend voucher for each shareholder. Whilst it's not essential that payment is actually made, at DEB we recommend that the payment should actually be made, as this provides further confirmation of the date of the dividend and reduces the possibility of this being challenged at a later date. Thus, each dividend should be covered by profits, approved by the board of directors, be adequately documented, and preferably paid. Given all these requirements, it's evident that payment of over-frequent dividends could cast doubt that all these requirements have been complied with. For example, does it seem reasonable that a board meeting is held each and every week to support dividends that are supposedly paid weekly? For this reason, we recommend that dividends should be done on something like a quarterly basis. We also make it easy for clients to correctly document their dividends. Our award-winning software, DEB Connect, enables our clients to produce all the necessary documentation instantly, whenever they want. It also maintains a log of the dividends that you take, so you can be more in control of your profit extraction strategy. It's very important that all the legalities of dividends are carefully observed and are built into your profit extraction strategy. If you would like more help with this, we will be delighted to meet and discuss it with you. Please give us a call for a free no commitment meeting on 01226 245824. Thank you for watching this video, and please subscribe to our YouTube channel so that you receive notifications when we upload new ones. Bye for now.